Want to shift gears now to the war in Ukraine, namely the economic implications of the Western sanctions imposed on Russia. It's continuing to grip companies there and companies that have exposure. And I want to show you in our chart of the day, this coming from S&P Global Market Intelligence. It shows you the risk of default rising for 22 Russian companies that S&P looked at. These are companies that are listed primarily on international stock exchanges, like, for example, here in the United States or in the United Kingdom. And just over the last month, which covers this chart period, the median market signal of a one-year probability of default rose from 2.5% to 23.1%, almost a fifth a chance of default. And this all coming as the Bank of Russia says today that it will allow trading to reopen on the Moscow exchange. That'll happen tomorrow for 33 specifically listed companies, but they're going to ban short selling in those shares. So Kiko, again, it seems like some of these stocks will be reopened for trading, but it seems like they're trying to limit the downward action, at least for those that are listed domestically there.
Yeah, I mean, the Moscow exchange going to have a very different look, and that's putting it pretty lightly when it reopens after being closed for nearly a month. And it's worth sort of backing up to see where we were the last time it closed. Obviously, the very first day of that invasion into Ukraine, we saw the main index fall more than 30%. February 25th, last day of trading. But if you think about the declines we saw in those stocks, that was before all of these Western sanctions took effect. So there's already talk, Brian, of potentially maybe splitting up the indices there, the foreign companies versus those that are domestically held as well. I mean, there's a lot of discussion happening, obviously, to see, what this is going to look like with those sanctions continuing to be in place. And if we're talking about a fall of more than 30% when the exchange was open, and now you've got the Western sanctions in place, I mean, are we just going to see more of that decline come tomorrow?
Yeah, and then my last point here is really just that we need to remember that, just because the S&P Global Market Intelligence data is suggesting that the risk of default is higher doesn't mean that they will default. Obviously, Russia and Moscow is going to do whatever they can to try to keep especially their state-sanctioned companies afloat. And take a look, for example, at some of the news that we had also gotten earlier this morning, that Russia would be pushing for the use of rubles in natural gas transactions. It's unclear exactly how they would do that because they've frozen, or a lot of Western nations have frozen exchanges to get, let's say, for example, US dollars into Russian rubles that companies would want to use to then have to transact given this new mandate. But again, Putin could be posturing here. We'll have to see how all that develops.